Let's talk more about these movements with Craig Pheiffer from Sasfin Wealth, and he's the chief investment there. Thank you, as always, for joining us, Craig. Let's start with the overall market movements today. A little bit of a mixed bag. We saw inflation data coming out of the US today at 4.9%, the rise there, lower than expectations, and that, of course, informing the way market participants reacted. What were your thoughts on that inflation data and really how the JSE closed?
Yes, hi there, Pheiffer. The market today, it finished flat, but it was held up largely by just a couple of the large cap stocks: Anglo-American, Anglo-Plat, Implats, Naspers, Prosus, Richemont. Those make up a huge part of the all-share index. If you look at the broader components of the index, a lot of your retailers were lower today, your banks, your insurance companies. So it was just, idling along. I think helped along quite a bit by some of those rand hedge stocks, given the weaker currency on the day. On the US inflation front, probably largely in line. The core inflation number has been quite sticky. Really, it's about where it was at the beginning of the year. Your headline CPI number has been coming lower, so that's been positive. But even at a level of 4.9, it's still a long way from the 2% target. And the Federal Reserve's been quite hawkish, quite aggressive in interest rate hikes, and also trying to talk a tough story to keep consumers not rushing out to spend. But it's positive. It probably just means at the end of the day that we're likely to see the US interest rates stay where they are for a little bit longer. And the market's been fueled by what's the next interest rate move. So we think the rates have peaked in the US, but these numbers being a little sticky just lead one to think that maybe they're going to stay higher a little bit longer before we see rate cuts.
Yeah. Before we get into some company updates, Craig, I quickly want to touch on the rand, currently trading at around 18 rand 87 against the US dollar. Is that purely an inflation story related to the US and the dollar, or are there other factors that are impacting the local unit?
No, I think it has probably nothing to do with the dollar at the moment, and everything to do with our own local situation. The rand is weaker across the board, across the euro and the sterling crosses. So it's not just the dollar. The dollar has been pretty much steady around 110 against the euro. So one can see it's not a dollar function. It's more about, I think, just in the recent news, more speculation on the load shedding front. That we talk of stage 8, stage 10, grid collapse. Maybe some of these really doomsday scenarios. And I think just, economists and market watchers are starting to even revise down their growth forecasts for this year, now even below zero. I saw one forecast of minus 0.4% this morning for the economy this year. So I think, when the economy is not growing, we've got all this talk of, even more severe load shedding, whether it happens or not. It impacts confidence of locals and global investors, and I think that's sent the rand on the back foot. It certainly looks a lot oversold and should recover a bit, but it's weak at the moment.
Yeah. Before we wrap up, let's then touch on TFG, because they weigh in quite heavily on this load shedding story, losing about 1.5 billion in earnings because of the load shedding. Fewer people getting into the stores because stores are dark during the load shedding period. What did you make of that trading statement overall?
The numbers themselves, the company itself is, it's doing fairly well. It seems to have be producing the right goods and services, the right clothes, the right things that the customers want, the fashion that the customers want. They seem to be gaining market share, in the US, in Australia, in the UK. So the company itself, doing what it does, seems to be doing very well. But it has all these macroeconomic headwinds and these local headwinds as well of load shedding, as you mentioned. Inventories have also been picking up given the lower demand. They've had to put things out more on sale, so their margins are reduced. So I think they're doing as best they can, but the actual environment for retailers is pretty poor at the moment. And we've seen that across the board, and notwithstanding just the Foschini Group's numbers.
Thank you very much for that update. As always, Craig Pheiffer, Sasfin Wealth's Chief Investment Strategist, joining us for the Market Wrap discussion. And that's all.